Hi everyone, I am from HDIN Research. Today, we are presenting a strategic analysis of Xiangyu Group, or XMXYG, specifically focusing on their 2025 capital management strategy and the rationale behind their latest super short-term bond issuance. This presentation is strictly confidential and intended for strategic assessment purposes. XMXYG is not just a local player, it is ranked 187th globally. Their ecosystem approach is their moat, integrating logistics, finance, and ports. Notably, their Yuliantong platform has redefined industry credit, proving that they are as much a technology and data company as they are a logistics giant. Quantifying the scale, 416 billion RMB in revenue for 2024. While the supply chain segment accounts for over 91% of this volume, it is important to note the contribution of their urban development and financial services. Our analysis suggests that the core engine is stable, though the group is now focusing more on profit quality than pure volume. In a fragmented market, XMXYG is a consolidator. As you can see on the charts, while the top 5 players in China hold about 5.2% of the market, XMXYG alone commands a 1.36% share. This leadership allows them to negotiate better terms and achieve economies of scale that smaller competitors simply cannot match. Diversification is their primary risk mitigator. They aren't tied to a single commodity. By balancing metal minerals, which represent 62% of revenue, with energy and agricultural products, they remain resilient against specific sector downturns. Their corn value chain, for instance, is the largest of its kind among A-share operators. Moving into Section 2, we must address the elephant in the room, the financial complications and the inherent risks associated with such a high-volume business model. Looking at the revenue trajectory, the decline from 562 billion in 2022 to 416 billion in 2024 is an intentional strategic contraction. HDIN Research views this as de-risking. By exiting low-efficiency trading segments, XMXYG is protecting its bottom line and enhancing capital turnover. The numbers tell a story of managed leverage. A debt-to-asset ratio of 74.68% is standard for this asset-heavy sector. However, the interest-bearing debt of 149 billion RMB necessitates the active use of short-term financing tools to keep the weighted average cost of capital, WACC, as low as possible. The Indonesia OSS project is the crown jewel of their transformation. By integrating stainless steel manufacturing, XMXYG captures high-value downstream margins. With a 10-year tax holiday and secured nickel resources, they are effectively evolving from a service provider to an industrial producer. The 1.5 billion RMB super short-term bond is a tactical move. Its 235-day tenor is perfectly timed for current market liquidity windows. The AAA rating from United Ratings underscores the deep institutional confidence and the implicit support of its state-owned background. Proceeds are managed with high discipline. 1.0 billion RMB is strictly allocated for refinancing the 24 Xiangyu CP001 bond, ensuring a smooth maturity ladder. The remaining 500 million supports the operational liquidity of the listed entity, Xiamen Xiangyu Company, Limited. For credit investors, the safety margin is substantial. XMXYG holds over 168 billion RMB in unutilized bank credit lines. This massive liquidity buffer provides over 100x coverage for the current 1.5 billion issuance, virtually eliminating short-term default risk. Their defense mechanism is institutionalized. From four-way consistency in logistics to headquarters-level hedging and independent internal audits, XMXYG has built a rigorous risk management architecture that is rare in the traditional logistics sector. Digitalization is the future. The Yuliantong platform uses IoT and blockchain to turn inventory into liquid assets. By facilitating over 10 billion RMB in financing, XMXYG has created a digital credit ecosystem that secures its position at the center of the supply chain. Looking toward the 6th five-year plan, the mandate is value over investment. The vision is to transform into a world-class industrial investment and supply chain operator, focusing on technological depth rather than just horizontal expansion. In summary, XMXYG demonstrates strategic resilience. With stable fundamentals, disciplined capital management, and a clear path toward high-margin manufacturing, the group is well-positioned for long-term value creation. Thank you for your attention. We are now available for Q&A. For organizations requiring deep dive market research or proprietary financial modeling on XMXYG and the logistics sector, please contact the HDIN research team via the details on the screen.